Hey, thanks for stopping by. Mr. Market here, and it's election season, folks. You know what that means? Uncertainty, excitement, and a whole lot of market shenanigans. The air is buzzing, and everyone's on edge, waiting to see what happens next. That's right, election years have a knack for making the stock market act like it's had one too many espressos. The stakes are sky high, and the market reacts to every political plot twist. Why all the drama? Well, when the political landscape shifts, so do the policies that impact businesses big and small. Every debate, every speech, every policy proposal can send ripples through the market. Tax reforms, trade deals, regulations, they all hang in the balance, leaving investors biting their nails. The uncertainty can be nerve-wracking, but it's also what makes the market so thrilling. This uncertainty can make the market act like a bucking bronco, with wild upswings and downswings that'll leave your head spinning. One moment stocks are soaring, the next they're nosediving. But hey, that's the stock market for you. It's unpredictable, it's wild, and it's always keeping us on our toes. It's a wild ride, especially when Uncle Sam's got a big decision to make. The entire nation watches with bated breath, knowing that the outcome will shape the future. So, buckle up, buttercups. We're diving deep into the wacky world of election year market trends, and trust me, you won't want to miss this. Get ready for a roller coaster of emotions and market movements. Let's dive into the echoes of the market. Picture the stock market as a moody teenager during election years, unpredictable, emotional, and prone to dramatic swings. It's like watching a soap opera, but with your money on the line. Remember the Trump surprise in 2016? It was like a plot twist in your favorite drama series. The market initially freaked out on election night, only to bounce back like a rubber ball in the following months. Investors were on a roller coaster ride, holding their breath with every tick of the stock ticker. And who can forget 2008? It was a year that tested everyone's nerves. The Great Recession was in full swing, and the market was already in a nosedive. The financial world was in chaos, and uncertainty was the only certainty. Obama's victory didn't exactly calm the stormy seas. The market continued to be a wild ride, reflecting the anxiety of the times. But hey, at least we got a cool president out of it, right? His charisma and hope-filled speeches gave people something to hold on to. Going back further, the 2000 election was a nail-biter. It was one of the closest and most controversial elections in American history. The Bush-Gore showdown, the hanging chads, the Supreme Court drama, it was enough to give anyone a heart attack. The nation was on edge, and so was the market. And guess what? The market hated it. The uncertainty and prolonged decision-making process made investors jittery. These are just a few examples of how past elections have turned the market into a drama queen. Each election brings its own set of surprises and challenges. But remember, folks, past performance ain't no guarantee of future results. The market is unpredictable, and elections are just one of many factors that can influence it. It's like trying to predict the weather in a hurricane. You never know what you're going to get, so buckle up and stay informed. Ever heard someone claim they've got the secret sauce for predicting the stock market during election years? They act like they've unlocked the Da Vinci Code of finance, promising you can predict market trends with laser precision. They'll whip out historical data and say, look, the market always skyrockets in an election year. They flaunt charts and graphs like they're holding the holy grail of investing. Don't buy into the fairy tale, folks. While there might be some loose connections, there's no magic wand to predict the market's every twist and turn. The market is as unpredictable as a cat on catnip. It's like trying to win the lottery. You're more likely to get struck by lightning while holding a winning ticket. The odds are just not in your favor. The reality is the market is a wild beast, influenced by a gazillion factors. It's a dynamic system with more variables than a high school algebra exam. Election outcomes are just one piece of the jigsaw puzzle. They're important, sure, but they're not the whole picture. Economic data, global events, even the weather can throw a wrench in the works. Natural disasters, international conflicts, and economic policies all have their say. So instead of hunting for a crystal ball, focus on what you can control, your own investment strategy. Make smart decisions based on solid research. Have a plan, stick to it, and don't let the political circus throw you off your game. Stay disciplined and keep your long-term goals in sight. Ever heard of the incumbent party indicator? It's like the market's secret handshake. The gist? If the current party stays in power, the market usually throws a little celebration the next year. Think of it this way. Re-electing the same party is like sticking with your favorite pizza place. Why mess with a good thing? It's all about that sweet, sweet stability. But wait, don't pop the champagne just yet. This theory has more holes than Swiss cheese. Sometimes the market does the cha-cha when you expect a waltz. Remember, just because two things happen together doesn't mean they're besties. Still, it's a fun little nugget to chew on during election season. Just don't go all in on it. Keep your chips close. Next, sector-specific swings riding the election wave. Buckle up, folks. Different sectors of the market can react like a roller coaster to election outcomes. For instance, if a candidate who's tough on healthcare regulation wins, healthcare stocks might feel the pinch. But if a renewable energy champion takes the stage, solar and wind stocks could soar like eagles. It's all about supply and demand, my friends. When policies shift, so does the potential for profits in certain sectors. Cha-ching! This is why you got to spread your investments around, especially during an election year. Don't put all your eggs in one basket unless you like omelets. Spread your bets and ride those political waves like a seasoned surfer. Hang 10. Policy impacts. The market reacts to promises. The campaign trail where promises are as plentiful as confetti. Some promises are gold for business, some are duds, and some are just plain bonkers. But here's the kicker. The market's got ears and it reacts like a cat to a can opener. Take tax cuts, for instance. If a candidate promises to chop corporate taxes, the market might throw a party expecting fatter profits. But if those tax cuts blow up inflation or the deficit, the market might get a serious case of the grumps. It's a high-stakes tango, folks. The market's always trying to guess the next move, and let's be honest, it doesn't always nail it. So stay sharp, do your homework, and don't buy into every campaign promise like it's a Black Friday deal. The global stage, US elections and the world. Think the US election only affects the US stock market? Think again. In today's interconnected world, what happens in America is like a viral cat video. Everyone sees it. It's like a ripple effect spreading across the globe. Or like that one friend who can't keep a secret. For example, if the US elects a president who's all about protectionist trade policies, it could spark a trade war with other countries. Yikes. That's bad news for global trade, and it could send shockwaves through stock markets around the world. Talk about a global plot twist. The takeaway? Don't underestimate the global impact of US elections. Seriously, don't. What happens in the Oval Office can have repercussions for investors everywhere. It's like the ultimate reality show. Investor psychology, fear and greed in the voting booth. Let's be real, folks. The stock market is like a soap opera, starring two dramatic leads, fear and greed. And during an election year, these emotions can go into hyperdrive. When investors are feeling like the future's so bright, they gotta wear shades, they buy stocks, pushing prices up. But when fear crashes the party, they sell faster than a hot potato, sending prices plummeting. It's like a roller coaster ride with the ups and downs powered by our collective emotional drama. The trick is to keep your cool and not let fear or greed hijack your brain. Remember, the market is a marathon, not a sprint. Pace yourself. For example, when a Democrat won in 2008, the market initially dropped but then recovered strongly. Conversely, when a Republican won in 2016, the market surged immediately after the election. Stay disciplined, stay savvy, and don't let the political circus throw you off your game. The grand finale, navigating the election year market maze. So, there you have it, folks. The roller coaster ride of election year stock market trends. It's a time of uncertainty, volatility, and a sprinkle of opportunity. Remember, there's no crystal ball for predicting market behavior. But by understanding the historical context, the potential policy impacts, and the quirks of investor psychology, you can navigate the election year market maze like a pro. Stay sharp, stay cool, and remember, buy and hold. It's the golden rule, folks, election year or not.